This video is for educational purposes only and should not be considered financial advice. Master tight stop loss trading with breaker blocks. In this video, we will be covering how to trade with a tight stop loss using ICT's breaker blocks. Outline. Intro. What are breaker blocks? How to use them. Examples. Recap. What are breaker blocks? Breaker blocks are candlestick formations that represent market manipulation by market makers. They're designed to entice traders into moving in a particular direction. These blocks form when price moves rapidly in one direction, only to reverse just as quickly, leaving the market makers in a significant drawdown. To mitigate this drawdown, market makers push the price back toward that original candle where they placed their orders. Once those orders are mitigated, then price resumes moving in the intended direction. A bearish breaker is a down-closed candle before an up move that takes liquidity. A bullish breaker is an up-closed candle before reversing downward. How to use breaker blocks. As a retail trader, you can take advantage of breaker blocks by waiting for the setup to form. Once price returns to the breaker block, you look for confirmation that it will hold. Key considerations. Wait for price to tap into the breaker block. Ensure price does not close beyond the breaker block. This allows for a tight stop loss and a clear validation of whether price is moving in your favor or not. By following this strategy, you can enter trades with reduced risk while aligning with the market maker's intended price movement. Here are some examples. Here is a breaker block on a 5-minute chart during the London session. We have a lot of breaker blocks here actually, but what you want to pay attention to is which breaker blocks have been mitigated. So the first one we see here, this is a high, a low, a higher high, and this down closed candle is actually a breaker block. Price had gone beyond the block and then went right back into it and then moved down. But here is the main one that we're paying attention to for the London session. Since this one has already been mitigated, we're looking at this breaker block, the high, low, and higher high. This breaker block gets extended and then gets traded into a little bit past the 50% level. But then once price drops below and stays out of the breaker block, that is your entry. This is another breaker block on AUD USD on the 5-minute chart. So you see price created a high, a low, and a higher high. This one is not a higher high. This one, however, is. And then once price creates that high, low, and higher high, it gets traded into. This right here is a breaker block. Price went into 50% of that level and then took off to the downside. But that is during the end of the pre-New York session. And then when 9:30 hits, price rockets all the way back up to mitigate this breaker block. This high, low, and higher high, this breaker block gets mitigated, and then price trades aggressively away from it. Here's another breaker block on AUD USD. The key thing to note about all of these breaker blocks is that price trades into a point of interest and a key level, and that's when it responds. We have a high, low, and a higher high, and that's what happens here. It gets traded into, and then this is the breaker block that takes off. This is another breaker block that happened during the London session, and we see during the end of the day, price created a high, a low, and then a higher high, and then it trades past it during the Asian session, and then price comes back to it right before the London session after midnight and trades right into this breaker block. And then during the beginning of the London session, you could either take that pre-London or wait for this breaker block that happened right here. Price created a high, low, and a higher high, and then also this high, low, and higher high. This was traded into at the very beginning of the London session, this breaker block, and then this breaker block was the last one that got tagged. This last one, we see a bullish breaker block where we have a low, high, and a lower low. And then we look at the up close candle, and when price closed beyond it here, it went right back into this up close candle at 50% and then took off to the upside. Recap. Breaker blocks are a powerful trading concept that helps identify market manipulation and smart money movements. We showed you how breaker blocks form, how to spot them on your charts, and how to use them to enter high probability trades with a tight stop loss. By waiting for price to return to the breaker block and ensuring it holds, traders can align with market makers and minimize risk while maximizing potential gains. Mastering this technique can give you a clear edge in price action trading. If you found this video useful, please hit the like button, subscribe, and drop a comment with your thoughts. Let me know if you've traded this setup before or if you have any questions. Thanks for watching, and I'll see you in the next video.